The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
To the COB this Friday, I'm Juliette Sully, coming to you a little bit earlier today because we have the last call in about 30 minutes time. We're just setting up for that, so it'll be a really fun event, as is always the case, to kickstart the new quarter. But let's just have a look at where the market is today. And it has been a down day. We had some comments from Fed officials in the US which saw markets there fall. Investors very much on edge ahead of the crucial March jobs report coming through tonight, our time. We also had a spike in oil prices. And one of the Fed speakers, Minneapolis Fed President Neel Kashkari, said that if progress on inflation stalls, he sees the possibility of no US rate cuts this calendar year. So, of course, that has given quite a few jitters to the overall market here as well. The ASX 200 is down 0.6% or 50 points. 7,767 is where we sit with an hour left of trade. Of course, that spike in oil, particularly Brent, where you saw it above $90 a barrel for the first time since October, has given some respite to energy players, but overall, pretty much every sector is tracking in the red today. Let's just get more into what we heard from Neel Kashkari, because US Federal Reserve members did question the timeline for monetary policy easing. Neel Kashkari saying he had penciled in 2 interest rate cuts this year, but then went on to say that if we continue to see inflation moving sideways, that would make him question whether they need to do those rate cuts at all. He said there is a lot of momentum in the economy right now. Getting you caught up on some of the top corporate stories as well today. Asset managers have been in focus. GQG Partners reporting its funds under management now up to $143.4 billion as of the end of March. It was also our stock of the day. Meanwhile, Magellan reported net outflows of $700 million for the same period. On the resources front, West African Resources came out with a quarterly update confirming its 2024 production guidance of 190,000 to 210,000 ounces of gold. And Woodside Energy shareholders being advised by major proxy advisor CGI Glass Lewis to vote against the re-election of Richard Goyder as company chairman. Now for a deep dive into the growth of wealth for high net worth women in Australia. Women are accumulating their own assets and investments while also benefiting from intergenerational wealth and baby boomer business transfers. To discuss the findings of a recent JB Ware report into the subject, I'm joined by Airwealth CEO Ray Tubman. Ray, in your mind, why do you think we are seeing an increase in wealth of Australian women, particularly in uptick in the number of Australian millionaires? I think 5.7% growth.
Yeah, thanks for having me firstly. It's great to be here. I think there's lots of reasons why the growth of high net worth women is increasing above that of men. And there's been really interesting recent research from JB Ware and Core Data that, as you say, the growth in high net worth women is almost double that of men. And this really comes down to a number of different reasons. Firstly, there's a higher participation of women in senior levels of the workforce, and that's fantastic. Also, there's a lot of women going into STEM, and that's increasing, and that helps because they tend to be highly paid jobs. And there's sort of 3 times the growth in women in entrepreneurship is also about 3 times faster growth than that of men in that role. We've also got, we're at a precipice of a major intergenerational wealth transfer, the great wealth transfer, as it's always referred to. And the fact is the baby boomers, who are now between 60 and 80, are getting older. This generation have generated more wealth than ever in the history of the world. We've got, the natural aging difference. So there's about 16% more women than men in the over 70 bracket, and that goes up to 33% more in the over 80 bracket. So, you know, there's a number of factors here. This tidal wave of money has already commenced in changing hands, and the fact is that women in the large part are receiving a lot of this inheritance. So there's also you know, numbers around something like 10,000 high net worth couples are divorcing as well, which is channeling another 15 billion per year into the hands of women.
I wanted to ask you about that, Ray, because as we know, divorce rates are on the rise, and that has been named as a reason why. You're seeing some of this intergenerational wealth transfer as well. What does that mean for investors? How can someone prepare for a change in scenario?
Yeah, it's a really interesting question. You know, if somebody comes across a large windfall of money and they're already financially aware, then they're going to be in a good place. But as we know, that's not always the case. So there are and especially when you look at women in the older age bracket in the baby boomer years, you know, a lot of money is transferring to them after death, but it could also be after divorce. And, you know, in a lot of cases, there's one partner in a relationship who are financially aware and the other is not. And the fact is, in that older generation, there's a greater number of men who used to take the control of the wealth. And you know, I think that's changing with generations, but that's the fact with that generation. So, you know, preparation is really important, and I think that comes down to two main factors, and one of which is financial awareness, and I think there are lots of great resources available to become financially aware. You know, actually some recent research by Schroders in the UK have suggested that in their lifetime, 80% of women will be solely responsible for controlling their wealth. So, you know, financial awareness is really important. The other thing that is knowing where your assets are, and you know that's actually our business Air Wealth is all about creating a living wealth register, so all of the family knows where all of their assets are, who the main contacts are, where all the key documentation is. So, and I. You know, I believe that enough to have started this company and built an app to help prepare that.
Okay, Ray, what I was really interested in by the JB Wellware report as well was not just what we've touched on about necessarily, you know, baby boomers passing on to their children or divorce and whatnot in terms of the intergenerational assets, but even within families, the oldest daughter effect. Did you see any sort of impact on where it comes, where you are in terms of what child number you are when your parents might be passing on wealth, or somebody's parents might be?
Yeah, like that's really interesting. I read that in the JB report as well, and I think that's fascinating, and I think I understand older tends to be more responsible, one would suspect, but to be honest, this is the first time I've heard of the oldest daughter effect, so I find it fascinating. But I probably can't add much to that effect.
Yeah, all right. Asking as a second daughter, not the eldest, Ray. In terms of also the risks here of intergenerational asset transfers going wrong, what would you be advising clients at Air Wealth about here?
Yeah, I think there obviously are risks. I think, you know, again, looking at research from other recent surveys amongst the high net worth, there is something like 64% of you know, estates have some kind of issue, and often it can, you know, be just as simple but really important as family fallouts after the transfer of wealth. About 2/3 of those people have got regrets, and the regrets are lack of preparation. So there tends to be something that somebody who is getting older doesn't necessarily think they're about to die, which we all hope we're not about to die, but so they're reluctant to bring up the topic, and the kids are also reluctant because they don't want to appear greedy. So this there's reluctance from both sides, but what this really means is what's absolutely vital is open communications and actually having a transfer plan in place about how assets are going to pass after the event.
And what about the challenge, Ray, for females who may be coming into wealth in finding a female advisor if they so were desired? I mean, there's obviously a gap here in terms of how many women are in the financial advisor business.
Yeah, there's a massive gap. And, you know, when you look at the numbers of funds under advice, that is lost after a death, and the inherited money, people are only retaining between 30 and 50%. Advisors are only retaining money between about 30 and 50%. So there's a massive, I think, need for trusted advisors to engage with the broader family. Obviously, as a community, we need to be trying to coax more women into the financial planning and advice industry. But there's no silver bullet to that. I think a lot of financial advisors are genuinely trying to be more engaging where they've traditionally dealt with the head of the family. With this massive intergenerational transfer that's about to happen, there is absolutely a need to engage. A lot of women do feel more comfortable speaking with female advisors, and we as an industry need to try and increase those numbers.
All right, Ray, thank you so much for your insights. Ray Tubman, Air Wealth CEO, joining us there. All right, we just want to get you brought up more again on the overall theme of the day. It is a down day. We mentioned, of course, the jitters coming through from Wall Street. A little bit of trepidation ahead of the non-farm payrolls report, always a key one, coming through on Wall Street tonight. And then the other reason we saw some jitters coming through, or the other two reasons I should say, was Kashkari's candor. So one of the key Fed presidents, the Minneapolis Fed president, Neil Kashkari, kind of pouring cold water on the fact that we might see rate cuts at all this year, and no surprise that that had an impact on markets, bond yields slipping on safe haven demand. But we also have this increasing geopolitical risk as well, and Israeli Prime Minister Netanyahu saying that his country will operate against Iran and its proxies. That saw black gold oil rally, the Brent contract actually above $90 for the first time since October, also driven by OPEC plus production cuts and strong demand. So all of those key themes really playing through into our market and setting us up for a negative day today. We're down about 0.6% with about 50 minutes of trade left to go. And it hasn't been, in fact, a very solid week at all for the overall market. Let me just get you a read on where the ASX 200 is over the last 5 days. I think it's something like 1.7% down over the last 5 days. So that includes last Friday, because remember, we were closed on, or last Thursday, I should say, we were closed on Good Friday and Easter Monday. So the week has not been great. We're about 2% below the 52-week high. And today it really is only the energy stocks that are performing well. The energy sector up by about 0.2%. All of those sectors that did well yesterday, the likes of IT, materials, coming under pressure. You can see some of the key players on your screen at the moment. Santos, Woodside, Karoon, all looking good. Let's have a look at some of the other sectors. We touched on tech. There it is under pressure. Xero is off by about 1.8% and Megaport down by 2.8%. Really just, a bit of a reversal of what we saw yesterday. And with the big miners, BHP and Rio under pressure. Fortescue and South32, though, looking okay, even though we did see a little bit of a dip in iron iron ore. Shipments of the steelmaking material from Australia in the week to March 22, though, 30% higher than 2 weeks ago. But of course, that was when Chinese markets were closed for a public holiday. All right, let's welcome to the COB Stephen Dooley, Head of Market Insights at Canberra, for his take on what we've been seeing in the commodities market, in currencies as well. The Aussie slipping from the top of its range, Stephen.
Yeah, it's been quite a surprising week, really. You mentioned in the intro how negative the overall sentiment has been, but the Aussie dollar's actually been able to outperform for most of this week. And normally, of course, the Aussie dollar's quite closely tied to overall risk sentiment. But it seems that this week, some of the moves in the markets really have been defined by that weaker US dollar. And so we've seen the Aussie dollar rebound, as you say, up to the top end of that range, around 66 cents versus the US dollar. That's been pretty much the cap for most of this year. We're a bit higher right at the start of the year, but really since about mid-January, every time we've got up towards 66, we've reversed back lower, and it seems like that's the case again. So very much the case at the moment, as you say, that we're stuck in this trading range. Aussie's been a bit better this week versus a whole range of currencies, actually. If you look at the euro, the Aussie euro's up around 2-month highs. The Aussie Swissy up around 5-month highs, and the Aussie Kiwi up around 1-year highs. So the Aussies actually found a little bit of spark this week, while the rest of the world has been under pressure.
What else has found a spark, Stephen, has been this rally in commodities when you look at gold hitting records this week, copper at 14-month highs. But interestingly, that rally hasn't necessarily been correlated all that much with the Aussie. Why do you think that is when we always think of it as a commodity play?
Oh, that's been one of the absolute head scratchers for this year so far, that we've seen these big rally in those commodities, also the agricultural commodities as well. And the Aussie dollar hasn't really been outperforming in the way that you normally see. The chart you've got up on the screen shows you that, certainly over the last couple of months, commodity prices have been surging higher and the Aussie's been under pressure. I think the main story behind that, like I say, it's got most, a lot of analysts scratching their heads. I think one explanation seems to be, again, driven by that US dollar. The US dollar has just been dominant over the last 6 months or so, and that's been driven by the fact that even as markets look ahead to rate cuts from the Federal Reserve, US interest rates are still at the highest point of any of the developed markets, apart from New Zealand by 10 basis points or so. But overall, the US is one of the most liquid currencies with very high interest rates. Looks to have been a real destination for cash, with financial conditions really quite loose at the moment. So, when we're seeing commodities push higher, it's partly a commodity story, but it's also partly a liquidity story. And I think that's why we're seeing such a big move higher in those commodity markets. You look back to the last time we saw a big move like this was back in sort of 2010, 2011. Again, a period of quite loose financial conditions. But this time, instead of the Aussie dollar outperforming, it really appears to be the US dollar, and particularly the US dollar versus the Japanese yen. That's been the hot trade. So it seems like what we've seen in this stage of the cycle, with commodity prices higher, the Aussie dollar hasn't been able to benefit because it hasn't been so much the commodity story, it's been the liquidity story. And it makes you scratch your head a little bit as well about previous big moves that we've seen in the commodity space that has seen the Aussie dollar push higher as well. I mean, is it just driven by commodities? Or was it that causation by commodities, or was it just correlation in a market that was just generally going up? So, of course, financial linkages between assets can break down and change at any time, but it's definitely an unusual period in markets where the Aussie dollar just hasn't been a beneficiary of a big move higher in commodities, what we often see.
Let's talk a little bit more about the greenback, particularly as we look ahead to that key inflation print next week, the FOMC minutes and the non-farm payrolls tonight. I mean, a lot of people saying this inflation print next week could be the make or break as well. What sort of traction do you expect in the greenback?
I think 100% the next week or so is going to be critical, and particularly the jobs number tonight, because we've seen the US non-farm payrolls, the headline jobs number, has just really continued to beat expectations. The last 4 months have all been higher than forecast. But if you look at a whole range of other indicators about the US labour market, if you look at the Indeed job openings, if you look at some of those employment components of the PMIs, the services and manufacturing PMIs, indeed what we've got up here, the Kansas City Fed's labour conditions market, really does appear that most of those relationships are broken down, and the non-farm payrolls just keeps on keeping on. So from that perspective, a strong labour market is really driving one of the reasons for the Fed not quite ready to cut rates yet as well. So that's going to continue to be a big story. If we do start to see the NFPs, the non-farm payrolls, start to reflect some of that weakness we've seen in other indicators, then that might be a bit of a green light for the Fed to go and to provide a bit more clear signalling about when they're ready to cut rates. So from that perspective, absolutely critical. But then also, as you say as well, the inflation numbers are going to be key as well next week, because what we're getting from the Fed at the moment is that, yeah, we've had a few bumps in the road in terms of inflation coming down, but they still expect the core view will be that inflation will come down. And we're seeing that around the world. I mean, this week we saw European inflation numbers below expectations. The last couple of months in Australia have been below expectations. So inflation around the world is dropping, but there has been a couple of bumps in the road, as Federal Reserve Chair Jerome Powell called them. So, yeah, absolutely the inflation number next week is going to be key. I guess taking a step back from that, if you look at the technicals, the US dollar has moved up to this 105 level. It's been quite a key technical level for the US dollar in terms of the euro. For example, we've moved down towards that 107 level that's been key support. The dollar yen's up at 151, 152. So all of these markets are at big levels historically where we've seen the US dollar reverse. So we probably shouldn't be too surprised if we see a bit more US dollar weakness over the next few sessions, the next few weeks.
Stephen, what about sterling, particularly as we look to geopolitical risks and, of course, the non-farm payrolls data?
Yeah, well, I mean, sterling's another story that's been very similar to what's happening in some of those other markets that we've mentioned, where it's been trapped in a bit of a trading range between sort of around 128 to 130 to the top side and around 126 to the downside, 126, 125 to the downside. So we've been in this trading range, and again, like sterling, like some of the other currencies, have moved back towards the bottom of the range, found some support and started to push back higher. So the pound does seem like it's got a little bit of strength versus the US dollar while it continues in that range. But it has been weaker versus some other currencies. And I mentioned earlier the Aussie pound up around sort of 2-month highs at the moment. So the pound is starting to weaken a little bit more. Again, we sort of think about how the year is going to play out. It's really going to be the sequence of central banks and how they cut. We still think the Federal Reserve is more likely to cut first. We think that the European central banks, the ECB and the Bank of England, probably likely to cut next. And then maybe the Reserve Bank of New Zealand and the Reserve Bank of Australia might be around the last to start cutting rates. So if that sequence plays out, then expect to see a bit of US dollar weakness in the short term, a bit of pound weakness in the medium term, and maybe the Aussie dollar can start to grind back higher if we are one of the last central banks to start cutting rates.
All right, Stephen, always great to get your insights. Thanks so much for joining ausbiz. Stephen Dooley there from Canberra. All right, let's get to the stock of the day. It was GQG Partners. Adam Dawes from Shaw and Partners and Mark Gardner from MPC Market shared their take on the call with Nadine.
Their top 10 holdings, which have done extraordinarily well, and as we just spoke about, that higher for longer is not going to help them. Nvidia, Meta, Novo Nordisk, Microsoft, Eli Lilly, So I dare say that fund, I mean, look, you're going to still be way ahead, but I would say it's a hold for now, if you're believing in the Goldilocks scenario. I wouldn't necessarily sell it. These fund, if you've got inflows, you're making money.
It's about performance first, and if those equity global portfolios are performing with all of those stocks in there, I suspect they have. So, you know, for one, it's performance, then two, it's inflows, and if they're getting positive inflows, that is really, really great. And I don't know any other fund manager that's listed that is getting this type of inflows at the moment because of, you know, sort of $4 billion in the quarter coming in. That really shows that there's some confidence going into this one. So I'm going to say hold as well. It does look like it's plateaued out a little bit on the chart there, so I don't think you need to sort of rush into it. But it's got all of the fundamentals tick, 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 that it means that this thing will continue to do very well.
All right, getting you caught up on the leaders and laggards of the session. Now, did we find any leaders? Yes, we got some of the ag stocks. Elders up 3.3%, Regis Resources looking good. Karoon Energy, of course, as we see these oil prices spike, Evolution Mining and Iris also higher. To the downside in the market today, there were many of those. Champion Iron with a near 7% fall. PEXA, Capricorn Metals, Deep Yellow and Magellan also under pressure. Having a look at what we saw in the smaller end of town, Winsome Resources was up 11%. St Barbara, also a gold stock, looking okay. Let's have a look at what we saw on the downside. Interestingly, some of the energy players in the small end of town under pressure, along with MedAdvisor and 29 Metals Limited. All right, let's get you caught up on what we're expecting tonight. Of course, the big one, the US non-farm payrolls, of course, leading into that unemployment rate, and European retail sales also coming through. When we look ahead to what we are seeing next week, here we've got consumer sentiment, the RBNZ holding its policy meeting. The key US inflation print that I was just talking about with Stephen Dooley, a lot of people saying this will be a make or break when it comes to what we see from the Fed, but you'll also get the FOMC minutes from their last meeting. The ECB also coming through with a policy decision on Thursday, and we get China inflation and trade data coming through on Friday. So never a dull week in markets. Let's have a look at where we are with 33 minutes of trade left to go. Down 0.6% on the CBO 200, the ASX 200 having a similar drop. A lot of caution ahead of the non-farm payrolls number and after a couple of Fed speakers, including Neil Kashkari, kind of pouring cold water on whether we may see rate cuts at all this year. The ASX 200 down 0.7%, 7,764. That does it for the COB, a special edition of the call. The last call is coming up next.
The COB is brought to you by...
Gil,
Oh, hey, Ken.
here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.